Hi everyone, welcome back to Couples Trading Lab. I'm Ray.
And this is Body. You're watching the Weekly Watchlist Session. Stick around until the end of the video. We got some really amazing setup for you. If you stuck around last week, you absolutely banked on Microsoft, Now, Hood, and several other stocks. If you stick around for this week, you're going to bank on some amazing setups for the next 2 to 3 weeks that are setting up really nice with very nice risk to reward ratios.
SPY continues to show impressive relative strength after breaking above the prior consolidation range near 749.50, with buyers maintaining control and showing little willingness to give up ground. The recent breakout above resistance has now been accepted by the market, and price continues stair-stepping higher while remaining well above the rising 20 EMA and 200 SMA. This remains one of the strongest trend structures bulls have seen since the April lows. One of the more notable developments is the gradual increase in buyer participation. Buying pressure has continued to build as price advances, suggesting institutional accumulation remains supportive of the move. Momentum is also confirming the trend. RSI has now pushed back above 74, entering the same territory that previously led to a significant melt-up phase. Historically, when SPY enters this type of momentum expansion while the 20 EMA is trending higher above the 200 SMA, buyers often continue pushing price beyond what many traders initially expect. Software and technology leadership remain key drivers of the rally, with capital continue to rotate into growth-oriented names. As long as the sector leadership remains intact, the broader market continues to benefit from those inflows. The main target zone I'm watching is 762 to 765.
I'm with you on that, Ray. I think the path of least resistance remains higher. Bulls have successfully reclaimed and held above the previous breakout level, and momentum, although remains elevated, buying volume continues gradually increasing, and sector rotation remains very supportive, where a lot of the stocks such as Microsoft, Now services are doing really well and leading the market higher on top of all of the other momentum that we're getting from quantum stocks like IBM and other AI momentum names. Primary risk here for bulls would be a loss of momentum following the recent vertical advance. Try and be careful once we reach around 762 to 765 level. That way, you can let the momentum go when we are far away from the 20 EMA line, let it come down towards this 20 EMA, and then ride the move higher from there as bulls have continued to step in as we get closer and digest and drift lower towards the 20 EMA and then expand higher over and over. We can continue to assume at the given moment that the momentum remains very strong. We are going to continue higher. Now, the only risk, as I mentioned, comes in from the fact that bulls may chase the momentum way too far away from the extension instead of waiting patiently for the pullback. That is very crucial. As long as you do that, I think you're in a very well position to continue to benefit from this ongoing market. Now, let's go over QQQ analysis. QQQ remains one of the strongest charts in the market and continues to lead the broader market indexes higher as capital continues to flow aggressively into software, AI infrastructure, semiconductors, and large cap technology. Following the breakout above 722.16, buyers have shown virtually no signs of distribution. Instead, every minor pause has been met with continued accumulation above the rising 20 EMA. Now, for me, the most ideal entry would be to get a nice retest towards the 20 EMA and then assess the momentum and ride the momentum higher. But given the gradual rising volume, the RSI above 70%, I think there's a great chance that we're going to get a green Monday, green Tuesday as well. For me, the main target for this week on QQQ is going to be 745. I believe around 745 to 748 is where traders must remain cautious, be a lot less aggressive, and wait for the moving averages, wait for price to pull back towards the 20 EMA, which is known to be the momentum extension gouge, enter with the bulls at that momentum reset and ride the trend higher. That I think is the best move once we get that 745 on QQQ. Now that we have gone over SPY and QQQ, let's go over the sector that I believe is going to outperform the most within the next 2 weeks. Now, I know financial stocks haven't done really well, but if you pay attention to the financial sector, usually it's in the forefronts of the market, leading the bull market higher. This is one of the very rare times that I've seen the financial sector not participating with the overall market. I think the structure that they're building is going to shoot the financials market far higher from the current levels that we are trading at. So, while technology continues grabbing headlines, financial stocks such as Wells Fargo, and I have a few others to go over, are quietly setting up one of the more attractive risk-to-reward opportunities inside the financial sector. Looking at the larger picture, WFC remains inside this multi-year ascending bullish channel that has been respected for several years. The recent decline from December highs brought price directly back towards the lower boundary of that long-term structure, where buyers are once again showing up and showing interest at this multi-year support. The important development is not necessarily the recent bounce itself, it's where the bounce is occurring. As we can see, price is stabilizing at this multi-year support channel that has previously acted as a support, and with earnings coming up in 2 weeks, I think these stocks are going to run up ahead of time. So if this is one of those stocks that you are interested in, I think it's a great time to buy.
I absolutely agree with that analysis, Body. I am currently holding the January 15, 2027 call, the $90 strike.
I think that's a great trade. I think it's going to print really nicely in the upcoming week, and I do encourage others to grab as well. Unlike SPY and QQQ, which are already trading near record highs and operating in momentum expansion phases, WFC and other financial stocks are still trading at significantly below historic prices, trading at very attractive risk-to-reward ratios.
The next weekly chart on our watch list is ADBE. It is still in a weekly downtrend channel, but buyers are starting to defend a lower trendline support, giving the setup a potential short-term reversal outlook. The main confirmation zone I'm watching is 265 to 270. A clean reclaim above that area would show buyers are stepping in with strength, opening the door for a move towards 295 to 300, then 320 to 330 plus. The bigger resistance area is the upper descending trend line near the weekly 200 SMA, a level ADBE hasn't tested in almost 2 years. If price reaches that zone, I'd expect it to be a major reaction area where buyers need strong volume to break through. For now, this is a bullish bounce setup, not a full trend reversal yet. The contract I'm watching for ADBE is the January 15, 2027 450 call.
Another one of the stocks on my watch list is Bank of America. As you notice, I'm looking at a lot of the financial stocks, and the reason why is because the risk to reward make great sense to me here. And I'm noticing, I've been watching the financial sector for some time now. The sector is looking very attractive here. Since the January peak near 57.55, Bank of America has spent months correcting and consolidating while the broader market recovered. Rather than continuing lower, price appears to be developing a potential accumulation structure directly around the 200 simple moving average line, which has repeatedly acted as support throughout the process. Now, if you notice, we are also forming this inverse head and shoulders, which is a very bullish chart pattern, and the anatomy of this chart pattern tells us that the particular structure has gone from making lower lows and lower highs on the daily time frame to now placing a higher low structure, setting up the potential to see a higher high and finally trigger a major breakout above its downtrending line here that has been acting as a neckline resistance for this inverse head and shoulders. The stock has spent the past several months absorbing selling pressure while holding above its 200 simple moving averages. As we can see, the momentum is also beginning to improve. RSI has recovered back up above the 50, while the TTM squeeze histogram has started turning positive again, suggesting downside momentum is fading and momentum buyers are starting to regain control. Current price is at 51, but once we do get that breakout above 53, I'm looking at 57 highs, very likely the 60s heading into the upcoming year. If Bank of America, BAC, successfully breaks above the neckline and confirms that inverse head and shoulders breakout, expect this stock to head towards that 60 target we mentioned. The setup is really great. The best part about this particular stock is that options contracts are usually very cheap, so you can pick up the June 17, 2027 calls. You can pick up the 60 call that's currently trading at 2.77, and I think it's a wonderful opportunity here to get that for so cheap. If you're a safer trader like me and you like to buy options contracts for long term to really minimize the downside risk, then you can pick up the January 21st, 2028 60 call, currently trading at 4.30. I think it's a wonderful opportunity.
Another stock I'm watching is CRM. CRM is building a strong falling wedge reversal on a weekly time frame. Price is starting to stabilize near support at 170 to 185. RSI is showing bullish divergence. The TTM squeeze momentum is turning up and volume is starting to expand. The key reclaim is 198 to 200 near the weekly 20 SMA. If it clears and hold above that level, I'm watching for a move towards 215 to 230s. The bigger breakout comes above the weekly 200 SMA near near 235. Above that, 270 is on the table. The contract that I'm watching is 011527 320 call.
And that concludes our Sunday weekly watchlist session. If you enjoyed this, please give it a thumbs up, subscribe to our channel, leave a comment on what your thoughts are, what you think about the current market conditions. It has been absolutely historic, to say the least. Yeah, thank you so much for watching. We hope you have a great week ahead of you. Take care.